Good morning, traders. This is Rick Majors here at Opteck.com. Welcome to today's daily market briefing. Now, Thursday here, July 10th, this is going to be kind of the day that we're really expecting things to start pick up. But again, after kind of taking a closer look at a lot of the markets and how they've been performing this week, we've been seeing this more as the opportunity for a lot of things that, take obviously the euro, gold, the Japanese yen, things that really had been getting hit pretty hard, especially throughout the month of June, are now really taking precedence in the market. And this is really because a lot of lack of participation on the side of things like the US dollar, the pound. I mean, the US dollar had some great results last week during the NFP and its own unemployment claims, and also through June did actually relatively a little bit better performance-wise than it has done in some previous months. The pound, which reached some record highs from several years back as well, just hasn't been performing that well so far this month. And I think this week was simply just kind of a brief switch in dominance, as we were seeing that a lot of some of the more dominant currencies were kind of taking a step back. More or less, you want to think of this in terms of a big battle, is that the forces of the U.S. dollar, the pound, to state some other ones, also the Swiss franc hasn't been really performing as well. Australian dollar, they're kind of going back to regroup now. They've taken some losses, and they should be really coming back further into the month. But right now, you can look at some of the euro has been kind of flip-flopping so far just in the last couple of days, but it should be taking a bit more strength throughout the week of this week and next week. And the Japanese yen has been really just pumping itself up, really doing quite well. Even you can see consumer confidence is up pretty nice little step as well, going up from 41 from 39. And we're really seeing here some improvement. But again, this is exactly what happens. We just got also the information in this morning that gold has hit its 1 week high. This is that kind of point where we start seeing, especially in assets like gold, which it's really kind of shooting up and then shooting down, where you want to start looking at, okay, it's hit a record high for the week. Now this is when we start taking it down, because this is the point where you're going to start seeing it really start to drop a little bit. Other than that, what we have today, you see there's a couple on the pound here for asset purchase facility, official bank rate, and MPC rate statement. The rate statement is really the only one that usually causes a large effect. They are heavily rated, but if you open up the folders here on things like the asset purchase facility, you can see that it very rarely ever changes. It hasn't changed beyond February. In fact, it's basically been the same thing since 2013. We can look here at the trade balance. This is a medium rated one. This one is set to go in a bit of a negative stance right now, but we'll see how that turns out. Britain is a bit of a touchy place in terms of trade balances, because it does require a lot of imports, and exports can be more service related and finance related than they are directly related to the actual goods market and shipping of importing and exporting goods. But they do import a lot of raw materials, a lot of food, things like that. You can see now in a lot of places, like if you go to Sainsbury's, something like that, one of the local grocers in London, there's a big movement right now for, and it's really been going for the last couple of years, but it's really, I've seen it got a lot bigger now, is for homegrown, kind of like nationally grown products. You'll see stickers saying this was grown in Surrey, this was grown in this place, and so on and so forth. And they're really trying to boost that up, so again, that they can have that import debt start to go down a little bit, and they can start focusing more on exports. But other than that, really, I don't want to say I'm going to be seeing it going down this week, but there's definitely a chance on it, as again, we're seeing that the British government on the overall is really trying to get its act together in terms of managing its budgeting account, because again, the same thing with the United States is it's 2014, since Afghanistan, since Iraq. A lot of the countries that were involved in the last decade of international conflicts are really trying to get their balance, especially in terms of finance and economics. The MPC rate statement, again, is the really only one you want to focus on today. Official bank rate, same thing. You go into the history here, you can see that it hasn't changed, again, since April 2013. You can go farther back. It's been the same thing since 2010. I mean, the last time we saw an actual change in this was, realistically speaking, February 2009. So again, we're not really expecting any changes there anytime soon. And then last thing after that, U.S. dollar unemployment claims set to go up a little bit today. But again, as we saw last time, it actually only rose 1,000, which wasn't even something overly particularly important, so it didn't do too much to the whole situation on the large. But what we can probably expect here is it to either slowly climb a little bit further numerically, or to actually start dropping and contracting a little bit, because even though we have seen on the overall that it did rise last week from the couple weeks prior to that as well, you can also see that despite the forecast being that it was either supposed to drop or remain the same, it actually continued to drop. So we might see a further drop, or we might see another small rise. That is just about all we have for Thursday. Now, moving on to Friday, again, we don't really have a lot going on. This has been a bit of a slow week, I know. You have Canadian unemployment rates and the employment change there. Both are set to, on the overall, be either the same or a little bit better, so I don't see a lot happening there. This wasn't a huge week. I think when we start diving into next week again, you can already see Monday and Tuesday are going to be a lot more interesting on the overall. So for those of you who are looking to make some big trades and really get into some volatility, this might not be your day, nor will it be your day tomorrow. So wait till Monday, basically, and then start getting into a much more interesting week. All right, guys, that's all I had for today's daily market briefing. Thanks so much for listening in. Don't forget to hit like and subscribe at the bottom of the page if you want to stick around with us Monday through Thursday at 9 a.m. GMT. Today's webinar at 2 p.m. GMT is Europe versus America, best in trading, talking about which market is really best for a trader and which kind of strategy you'd want to be using in each one. So don't forget to sign up and talk to your account manager about getting in before the list closes. Guys, this is Rick Majors here at Opteck.com, wishing you a happy trading day.